Welcome back. Thank you for joining us as we watch your ag commodities through the day. Here on Tuesday, I'm Marlon Bowling. USDA announced an overnight export sale this morning. It was a sale to China. It was a sale of soybeans. It was in the amount of 132,000 tons, and it was for new crop. So they dropped that on the market right before we opened up our trading session. And in case you missed it earlier today, the USDA crop progress and condition report, we showed the corn planting basically about done around the country, except for maybe North Dakota, which is only 75% done. How about the condition? Well, on the corn, this second week of ratings by USDA showed corn in good to excellent condition, running about 74%. And soybeans are running at 70%, good to excellent ratings. Both of those not too shabby when it comes to the overall condition of the U.S. crop. Now, yeah, sure, there are some areas where it's poor to very poor, but that only runs about 4% nationwide. Let's take a look at our current prices on the corn board first. We are mixed. We have July corn now turning down a half cent at 3.22 3/4. Last time we checked, it was up a penny. Now the deferreds are just a little bit higher here. On the soybeans, we have the soybeans surging ahead. They were up about 13 cents last half hour. Now we have July up 11 1/4. We're at 8.51 3/4. November up 9 1/2 at 8.61 3/4. Okay, now to the wheat. And in Chicago, these live quotes from bar chart are showing July Chicago wheat 3 lower at 5.12 1/4. And in the Kansas City market, you have that July contract down 7 1/2 at 4.55. And if you look at the spring wheat trade, right now July is down 3 at 5.18 1/4 in that Minneapolis market today. On the cotton, we now have July up 94 points, and it's all the way up to 61 cents. How about that? December now 97 higher, and it's at 59.68 on the high of the day, and getting closer to 60 cents now all of a sudden. The canola market in Canada, we have the July contract about $3.10 higher in Canadian currency at 460.20 per metric ton. Brian Hoops joins us now, the president of Midwest Market Solutions, and lots to talk about here, Brian. Got the markets going all directions today. The corn market, it tried to rally early on, and it's kind of fizzled out right now. Soybeans went surging ahead, and they're kind of backing off of their earlier highs, but not a bad day for the soybeans overall. How come?
Yeah, not a bad day for corn or soybeans, Marlon, considering crop progress conditions that came out yesterday and the weather forecast that we have. Both of those are bearish to this markets here. We should be seeing prices probably moving lower when we have conditions coming in as high as they are for both corn and soybeans, and the forecast that probably will improve those conditions again by next Monday after a week of a lot of sunshine, warmer temperatures, some intermittent showers. It's really an ideal situation. One thing we've noticed in the corn is we have very light bear type spreading. You have the July, September contracts fractionally lower, December fractionally higher. We saw that in the livestock markets yesterday. And in the soybeans today, we are seeing some buying interest coming in here. China stepping in and buying after yesterday morning, saying they would not buy any more U.S. products. But, they're buying for new crop delivery, October and November. They're pretty well covered through the summer months. It's those fall months that they're trying to cover up here. And prices did move above the 50-day moving average for the first time since, I believe, last January. We saw a close above it. So if we can see a close above that area, we would expect more technical buying to come into that soy complex.
Okay, Brian, we'll come back and we'll examine our cattle and hog markets in just a moment. We're talking with Brian Hoops, and we'll be right back. Let's go to live cattle and see what's going on the futures trade right now in Chicago with live quotes from bar chart. We have June down $1.47 and now down $1.42 at 96.87. August down 75 at 98.22. Meanwhile, on the feeders, here we go. The August down $1.37 at 134.75. September down $1.10 at 136.10. Lean hog so far today, we have the nearby June down $1.60 at $53 even, but the deferreds August on out are 30 to 60 higher. Let's go back to Brian Hoops and talk about this here a little bit. I was surprised how much cash cattle trade we had yesterday to start out the week. What does that mean? Are we going to have much the rest of the week now?
Yeah, maybe it'll be quiet the rest of the week. We'll have the auction on Wednesday like normal. May produce some sales there, but the trend is starting to weaken a little bit. It looks like the cash trade that we've established may be the high here for a while. Cutout values just plunging, and that's going to keep a lid, I think, on any cash strength. And so weakness starting to develop in the cutouts. The cash market's a little weak here. It's estimated that beef and pork plants are running 85 to 90% capacity. So we will continue to ramp up some of these kills, but it's not going to get back to normal levels. But that'll keep pressure on the cutout values. And, unfortunately, when I was on yesterday, we talked about bear spreading taking place in both the cattle and the hogs. That little rally that we had was led by the deferred contracts, and that's given way to some front month selling in today's trade. That's why we watch the spreads, is because they are pretty accurate in determining direction for the markets.
All right. Well, thank you so much, Brian, and I appreciate all that information today. Brian Hoops of Midwest Market Solutions. He's based in Springfield, Missouri. A quick look at the U.S. dollar index value. I was talking about that earlier. It was dropping a little bit back then and still down 260 points. We now have June futures at 97.560 right now, Christina.